Gold Desk Update. December structural break drives January trend continuation. Weekly macro structure aligns with a 3-month intraday trend as gold tests a key decision zone. This is the Gold Desk Update for January 12, 2026. This update builds on the January 3rd desk note, which itself followed the original December 2025 structural transition report. In December 2025, we mapped the 12-year gold cycle from 2013 to 2025 on the weekly chart, moving through balance, expansion, rotation, and stress testing. That work identified a structural transition as gold broke into a new long-term range between 4,350 and 5,000, marking the beginning of a new macro phase. The December breakout was not a spike, it was a regime change. What mattered next was how price behaved once it entered that new range. In the January 3rd update, we highlighted how gold pulled back to the lower boundary of the new range at 4,350. That level was tested 3 times and held each time, confirming it as structural support rather than failed resistance. From that base, gold broke out of its 3-week consolidation range and pushed to a new high near 4,630. Confirming that the new macro structure was being accepted. On the 2-hour COMEX chart, a clear short-term structure has been in place for nearly 3 months, defined by higher lows and higher highs. Every pullback has been absorbed, which mirrors what we see on the weekly institutional accumulation inside a new macro range. This is what structural alignment looks like. The intraday trend is not random. It's responding to the same framework defined on the higher time frame. The most recent rotation from the 4,350 mid-range has now carried price to a key intraday level near 4,605. This zone is now acting as a decision point. Acceptance above this level opens the door to the next intraday expansion phase at 4,684 and 4,780. Failure to hold it would likely trigger a rotation back toward 4,490 region, without breaking the broader trend. What matters here is not prediction, it's how price behaves at the structure. The December macro transition defined the battlefield. The January pullback confirmed acceptance. And the current intraday structure is now revealing how the next phase is being negotiated. Structure provides context, price provides confirmation. These desk updates document a structure-first process, observing how price accepts or rejects predefined levels over time. Coverage spans from futures, commodities, forex, bonds, crypto, stocks, and indices, with structure providing context before direction. This observation is for informational purposes only, and does not constitute financial advice.